Hello, everyone, and welcome into crushthestreet.com. I am Kenneth Amaduri, and I'm joined today with Kenneth Lewis, the CEO of APMEX and One Gold. This is, APMEX, if you're not familiar with it, is a major precious metals bullion dealer. Among the largest bullion dealers in the world. Is it the biggest, Ken?
Obviously we're a private company. A lot of people don't share those numbers, but I do think we're the largest in the U.S. for sure.
There you go.
I don't know about worldwide, but I got to believe we're right up there.
Well, if someone's going to have a pulse for what is going on in the precious metals market, it is this man, and I look forward to picking his brain on what is happening. Obviously, we had our last conversation in early May of 2019, and he advises, hey, take a look at what's going on. It's a breather moment. Don't get too discouraged here with precious metals. And sure enough, we went into a very exciting summer for precious metals, and here we are today. $1,500 gold, just right under $18 silver. Let's get right into it. Ken, thanks for coming on Crush the Street once again with me today.
Yeah, appreciate the time, man.
So let's talk about the timeline between where we were in May and what we're seeing right now. What changed? Why are we seeing this surge in precious metals?
Well, look, I think it's a number of things, right? With the monetary policies of the Fed, lowering interest rates, made opportunity cost of owning gold lower. I think you had world events out there, some of the trade issues that were out there, and of course, GDP growth not being at levels that people had expected. Look, the equities markets, depending on who you talk to, are overvalued. I think there was just a run to safe haven investments for a short period of time there. What's really remarkable to me is what the equities markets have done. They kind of were up, they kind of pulled back, and now they are on a tear again. What's impressive is precious metals have actually had a great year. But in retrospect, if you look at the equities, it's still continued to perform very well. The equity side, normally you see a little bit of a difference there, where when metals are hot, the equities kind of pull back. That hasn't happened quite yet, and I do think that's possibly something to watch for in the future. Right? Is there's going to be a divergence here. Precious metals and equities have performed very similar this year. What's going to happen over the next 6 to 12 months? I'd be very amazed if we sit here a year from now saying they're performing similar. I just don't think that's going to happen.
Yeah, that's interesting. And one thing that we know now is that central banks and ETF demand for gold has really skyrocketed lately. Central bank gold buying was at a 50-year high in 2018. And some experts and, from the data we're getting right now, 2019 might even break the 2018 50-year record, which is really interesting. So let's talk about that a little bit. Who is buying gold, and is it just the central banks and ETFs, or are we starting to see retail buying come into the space?
I think, well, first and foremost, obviously, the central banks jumping in is more, I think, their reflection on the dollar and it being, so highly valued for so long, and people want to have less dependence on the U.S. economy in general. So I think you're going to see World Bank demand continue to grow like it has since 18. But we're getting back to physical. Physical hasn't quite kept up with the ETF take that we're seeing. ETF volumes the inflows are very strong. You can look at the COMEX, the futures market. There's a lot of long interest in precious metals right now. But the physical side hasn't quite kept up like we would like. It's not been a bad year. It's it's up slightly over last year, but it hasn't quite kept up with the way ETFs have done. I'm not sure why that is. I think sometimes what you find is typically physical buyers are ahead of the curve when you come to procuring metals versus what the market's doing. And I think people are really holding off, waiting to see what equities markets are going to do. I think you got a lot of savvy investors are diving into gold, but a lot of people who are physical buyers, they kind of are waiting on the sidelines to see equities pull back a little bit.
Well, what are your thoughts on just the fact that, physical buyers might have already been in gold, and they've just kind of been exhausted over the last number of years, just kind of watching gold go down from its high of 2011 and then slowly inching down from there. And then, now they just feel like, hey, I'm already positioned in, or I've already sold, or I've already given up on it. And it's just going to really take higher numbers for us to really see them pile back in.
I think you're probably right. I do think people got, felt a little burn there when precious metals pulled back as much as it did over the last several years. But what I try to tell people is you should not look at precious metals as an investment on its own. It's a portfolio diversification strategy. Where does it fit within your portfolio, and how does the overall portfolio perform? If equities are going to do poorly, for example, you'd want to have gold in your portfolio. If equities were to do great, you still want to have gold in your portfolio, in my opinion. So yeah, I think there's been a little bit of people wanting to see, frankly, just see the equities markets have more resistance. Every time we see the equities market pull back 1,000 points, it shoots back up, and it pulls back and it shoots back up. It has not shown a propensity to stay down over the last couple of years, and I think people are going to have to see that sustain itself before they really dive in. Now, I will tell you on the physical side, we are seeing larger investors start to uptick. So we measure the number of orders we do over $50,000, and I can tell you that number is up 42% in the last 5 months. So we are seeing larger buyers starting to come back in the fold. That generally is a good sign for physical metal because larger buyers do tend to act a little sooner than the broader mass.
Do you ever look at some of these like price thresholds and does it mean anything to you? I mean, I'm watching the $1,500 mark and it seems like it's very psychological. We're kind of hovering around it. I mean, we're not staying too far below it. We're not staying too far above it. We're hanging around there. And it seems like gold really wants to be at that point. And I'm not sure if it's, the technical traders or what's going on exactly, but it seems like 1,500 has become a significant number for gold as of the last short while here.
Yeah, I think you're right. And look, I was reading an analyst report that was predicting 1,600 gold by the end of the year, and I think there's a general view that we kind of have a cap right now at 1,500 bucks. It is psychological. I think some people will. They've longed gold enough to where there's going to be offsets where people are taking countering positions, if you will. I think when it goes through 1,500, though, it's going to go through with a bang. I don't think it's going to go 1,500, 1,510, 1,520 and ease its way there over 6 to 12 months. I would not be surprised when it gets through that threshold. It goes through it like a freight train, kind of like what it did earlier this year when it jumped all the way to 1,500. I think it's going to move very quickly once it gets over that hump.
Yeah, it really seems like people are going to be wanting or wishing they had 1,500. Just like everyone's now wishing they had 1,300 back again. But at 1,300, everyone wanted 1,200 and 1,100, and it's just like constantly a little too expensive for people to just pull the trigger or buy it and wait, just wait for gold to do what it's going to do and not try to catch the perfect dip.
I think you're onto something there. I think you're onto something. I also think, we talk about ETFs, their inflows are very significant right now. And I could tell you our digital product's done very, very well. I think people holding physical is something they're really waiting to see to become more alarmed with our economy, with our government, with the financial systems. They're looking for a little more resistance out there if they're going to hold physicals, is my gut feeling. But on the digital side, our business is booming. And I think that's because people like the ease of getting in and out of metal that a digital or even an ETF offers them in the marketplace today. Where physical has a little bit more of a challenge to get in and out of, a little more cumbersome. And so it's more of a long-term commit. I think people are waiting and seeing right now. I think physical will take off at some point because people will be ready to commit to it long-term. But while they're waiting to become committed, they're trying the ETFs in the digital space is what I'm seeing here now.
So what is your take on not from a perspective of an opinion on Trump, but the Trump economy and what it's doing psychologically to these retail investors? Are people not concerned about some sort of safe haven asset to a certain degree and they just don't think there's a need for it? Or are they? I mean, they're looking at all these negative interest rates around the world and they understand that there's some sort of underlying problem and that the Fed was trying to raise interest rates into this Trump economy and they couldn't. They got backed into a corner and they got a reverse course and really things aren't as good as they seem. So what are kind of your thoughts on that? And, is that playing into the psychology of people buying gold?
Look, I'm not a historian here, but I am absolutely amazed at the power that Trump has on the fiscal system that we run today. The Fed's supposed to be independent. And it's very, very evident when the Fed doesn't do what Trump thinks they should be doing. There's a lot of public um, um, chatter out there, and Trump's front and foremost about doing that. Look, how long can a country continue to print money, drive the deficit to all-time highs, lower interest rates, infuse the economy with bond buybacks? I mean, how long can this last? I was reading an article that frankly concerns me a little bit, and that is, if you're going to take 50 basis points out of the borrowing rate, you're really starting to take down your number of options when the market might really need it, when the economy really needs an infusion. What's our Fed going to be able to do when that time comes? And I think that's concerning. A little story I tell, by the way, Trump actually is a believer in gold. Trump actually took gold as a deposit from APMEX back in the day. And when we got out of our lease in New York, he actually took ownership of the gold. So he's a gold bug. He does believe in gold. I would not be surprised. I'll throw a thing out there for people to debate. Would we ever see Trump wanting us to go back to the gold standard at some point? Would that ever be something Trump would throw out as a possibility? It would not surprise me, because I do think he does believe in the stability that comes with gold. And frankly, I think he is frustrated with some of the decisions that the Fed has made over the many years that he's been in presidency.
Well, that would be something, certainly, right? Yeah, and who knows, right? Depending on how crazy things get, and negative interest rates would have been an impossibility years ago, and here we are, right?
Yep.
People paying to someone else to use their money, like
it's crazy.
Weird. It doesn't make sense from a capitalist free market perspective, but here we are.
It's funny related to that. I did a presentation recently, and we went back and we looked at what the dollar has done with inflation, and where you'd be sitting right now if we were just holding cash. We talk about the banks now charging us to keep cash in the bank. If you just look at what inflation has done to the dollar, I think it go back to the year 1990. You've lost 46+% of the dollar's value in the last, since 1990, where gold's gone up 5x. So it's, when I ran those data, I always knew about inflation. I knew its impact on the dollar, but it really makes you think long and hard. How much cash do you want to hold? You're lucky if you can get 2% paid. And I think those days are even going to come to an end with the way rates are going right now. Hard to believe.
Yeah. When you consider how much, you were able to live on, retire on, 10 years ago, 15, 20 years ago, whatever it was, and interest rates a lot higher, that's where we've seen a lot of hyperinflation, right? People need like 10x what they had saved that many years ago, just because interest rates are so low. You can't live off the same cash flow with your lump sum as you would have been able to do decades ago in prior generations. So people talk about hyperinflation. We haven't seen it, but we actually have seen it in terms of what people need now to retire.
Yeah.
And I think about that a lot, actually. Ken, let's talk a little bit about silver. What sort of upside, in your opinion, do you see in silver? Gold, just to get back to its all-time high, it's a 25% move or whatever it is, 30% move from where it is now. Silver has got quite a long ways to go just to even get back to its all-time high. And we know silver is a smaller market, and there's a lot of data out there that would suggest there's a lot more manipulation that goes on in silver. So what are some of your thoughts in regards to silver here?
So I've got myself, look, I obviously, here's how I would say silver. About 80% of my assets in precious metals are in silver right now. I think it has more upside and less downside than gold. I've speculated what I think the peak of silver will be. I'm not going to do that today because I've got people debating that number. But I would say is I don't know if we'll ever return back to its all-time highs, but I'd take a doubling in price and be very happy. And I think silver has that potential to do that. It's not as rare as gold. It's more readily available in the markets today. So there are some things working against silver, unlike years ago when it hit those peaks. I don't know if we're going to see a repeat of that anytime soon. But I do think silver's got a lot of upside. Just look at the gold-silver ratio. Look at where we're at today. The data would say that silver has definitely some potential for upside. Its institutional use helps keep it, on the mainstay where there's going to be a consumption there. But yeah, I think silver has nice upside when you look at its historical performance. You look at its relation to gold. It seems like it's more of a buy than gold is right now.
Well, and so having said that, I just want to clarify. You said silver has more upside and less downside than gold.
Yeah, in my
Um,
opinion.
what do you mean by less downside
So
than
when I
gold?
think about how low silver could go, $15, $16 a share, you're not going to go much lower than that. History has shown that. When you think about gold, gold has shown it can go down to $1,100 when the markets get tougher. So when you think about that kind of movement, $400 on a $1,500 base versus $2 on a 1,750 base, I just think the downside risk of silver is much more minimal than what gold could do.
All right, Ken. So, kind of as we wrap up this interview here, how would you assess somebody's situation? How should somebody go about assessing their situation, whether or not they should be in gold, silver, or what should this be in their portfolio?
Yeah.
What's your general advice for people
Yeah, I think
in
I
this
think the
situation?
markets out there say 5 to 10% is not a bad area to have in metals. I think what I tell people is, look, I think you should have a little bit in physical, and you decide whether you want that in gold or silver. I'd probably be more of a gold physical owner just because of the space it takes up and the challenges that come with having large positions in silver. And then what I would do is I would take an above and beyond position if I feel good about metal. So if you're feeling like it's an opportunity where it's got upside and you like the safe haven aspect of that, then I would consider, frankly, our One Gold product. I'd buy physical, have a base of that, and then I would get into something like One Gold where you could buy silver for 5 cents over spot, and you could sell it in a moment's notice, and your spread's going to run you about 15 cents. So it's going to be minimal cost. You can get in and out very easily, and the metal's there. So some people believe in going out and buying ETFs, but I think there's a lot of questions and concerns about that, and the fee structures are awfully expensive. So my advice would be 5 to 10%, a portion in physical, take above and beyond position if you believe in metals and its possibilities. And if you do, consider a product like One Gold on the digital side, where the costs are very economical and frankly, very easy to get into.
So, just real quick on following up on One Gold,
Yeah.
what sort of assurance do people have in something like One Gold? I mean, is there any risks associated with that people should be aware of?
Yeah. So what I tell everybody is, and you should ask these questions. I have a PowerPoint deck if you'd like that we can give you that you can share with your listeners. I was at a Stansberry conference recently and presented to about 500 people, and I tell them how to select a partner and what you should look for in the digital gold space. Passing of title is critically important for you as a consumer. You want to know it's your metal. You want to know you're fully protected at all times. The metal that we sell is title passing. It's fully insured with Lloyd's of London. It's audited by an outside accounting firm, a top 5 accounting firm in the country. And then you got Atmex and Sprott, the 2 largest players in the alternative precious metals market that you're going to find standing behind the product. So you should be very comfortable that your metal's always there and that you're protected. And I would tell people, with the word tokens in the description of the product, be careful. I tell people to do the research on who you're doing business with, because frankly, there's a lot of people jumping up and saying they're now relevant, but they have no background in precious metals. They haven't been around long enough to barely know, what precious metals is. So do your research, but title should always pass to answer your question, and you should always be fully insured through the process. And they should make it easy for you to get in and out. If you can't get in and out in a moment's notice, then I would be concerned as well. It literally should matter of be seconds. In our program, you can actually buy it and sell it, and the cash will be back into your bank account in a matter of moments' notice. Our issue is the banking system's slower than we can go, which is pretty impressive.
Right. Well, there you have it, everyone. Kenneth Lewis of Atmex and One Gold. If you want any more information on him, we'll have the links in the description area. Ken, thanks so much for coming on Crush the Street once again with us today and updating us really in this exciting time. I mean, I know people feel like they might have missed the move from 1,300 to 1,500, but I gotta be honest with everyone. I think this is still the early stages, And I hope that the move that we've seen isn't going to keep people on the sidelines and cause an even larger miss on gold's next move from 1,500 to 2,000, and whatever beyond that people might think gold is going to. So, without any further ado, thank you so much for coming on Crush the Street and sharing your time with us.
All right, thanks, buddy.